Welcome to Real Talk Columbus, discussing today's market trends and answering your questions. All right, so today we're going to discuss the 1031 exchange, just the basics of it, and how you could possibly take advantage of it. So, to get started, there's basically going to be a couple of things we're going to go over: what it is, who's involved, and what the process is from a very high level standpoint, and how it can affect not just property owners who have investment properties, but even some homeowners who use residential in certain circumstances. So, to start, what is a 1031 exchange? Simply put, it is when you sell a property for a capital gain and you take those profits, those gains, and you buy another property. The government will actually allow you to defer paying taxes on the capital gains until you sell that property again, or if you continue to roll over and do more and more 1031 exchanges, you may never end up paying taxes. You'll just pass the property on when you pass away. Who is involved in a 1031 exchange? Well, you've got the person who is the exchanger, the person who's selling a property and receiving capital gains. You've got the buyer. Typically, you're going to have a real estate broker, real estate agent involved in some way in helping with the sale of the property. Then you're going to have, hopefully, a tax attorney that can help you navigate through some of the more important decisions that you're going to make in this process. And you're going to have something called a QI, or a qualified intermediary, that help do the exchange. I do need to give you a disclaimer. Although I am giving you information about the 1031 exchange, I don't consider myself an expert, and you're going to need, if you're going to do one of these, someone like a tax expert who can help you through it, as well as a QI, qualified intermediary, to get you through the process, along with your real estate broker and the other parties involved. So let's first start with the tax person. Hopefully your tax accountant has experience with doing one of these, or they can help you find somebody who specializes with the 1031 exchange, so that they can advise you on the specific decisions that you're going to have to make in regards to the specific properties that you're buying or selling. The second one is the qualified intermediary. Again, hopefully that's a good qualified person that can help you and guide you through this process. What is that person's job specifically? It is to actually hold the funds during the exchange and disperse the funds when you buy your next property. What are some of the specifics of what actually has to transpire to qualify for a 1031 exchange? First and foremost, you've got to be selling a property and receiving capital gains that you would otherwise normally pay taxes on those capital gains. Next, there are some time frames involved. You must sell your property and identify one or a list of prospective new properties within 45 days. After that, you must actually close on one of those properties within 180 days. Otherwise, you're going to miss out on the opportunity to defer the taxes. And the last piece, which is a very important piece, is you have to be exchanging like-kinded properties. What that means is a real estate investment or an income-producing property for another real estate investment income-producing property. Now, what qualifies can vary quite a bit, but for example, if you take a duplex that you've been renting out, you can exchange that in and buy a commercial property that you're going to be renting out. Those are considered like-kind investment properties. Something that might not work completely would be, for example, you sell a piece of real estate like a duplex and you go buy a hotel, which is an operating business. You are buying real estate and an investment property, but you're also buying a business that's operating that has other assets like equipment, furniture, and the business itself. So you're going to have to get with your tax person and determine what specifically would qualify as the purchase of the real estate and what would qualify as the purchase of the business, and you'll be able to use the tax advantage on the real estate but not the business itself. So generally speaking, like-kinded property means one investment property for another investment property in most cases. Now, you can go from, for example, a multifamily property that you're renting down to a single-family property as long as it's still going to be a rental property, an income-producing investment property of some sort. One other thing I mentioned earlier is how this could possibly apply to a residential primary residence situation. Typically, 1031 exchange does not apply to that. If you were to sell a residential primary residence and gain $250,000 for a single person and $500,000 for a married couple, the government will actually allow you to not pay capital gains taxes up to those dollar amounts for a primary residence. But in the case that maybe you're going to make more than those dollar amounts, then you could try to take advantage of the 1031 exchange. Here's how you might do it. Let's say that you bought the property for $100,000 and now it's worth $1 million. You have $900,000 of capital gains. If you're a married person, you're going to have $400,000, which you're going to have to pay capital gains on if you sell that property. You won't owe it on the other $500,000 because of that rule we just talked about. Say that you don't want to pay capital gains on the additional $400,000. You may consider turning this property into an investment property and renting it out, maybe even renting it to the person who wants to buy it for a specified amount of time, maybe 2 years or something that you and your tax accountant agree upon. This way you can take that example and show the IRS that it is an investment property, and when you do sell it, you can roll at least a portion of those proceeds over to a 1031 exchange and receive the tax benefit on at least part of it, if not all of it. So it is somehow applicable to certain residential situations, obviously converting it into more of an investment property in that scenario. Hopefully that's some good information for you about the 1031 exchange. As always, reach out to me if you have any other information that you'd like to find out, and we'll talk to you next week.